I'm Ashby Jones, a legal editor with the Wall Street Journal. The Securities and Exchange Commission has filed insider trading charges against Mark Cuban, the outspoken owner of the Dallas Mavericks. According to the Wall Street Journal's Kara Scannell, who broke the story, Cuban allegedly dumped shares in Mama.com, a website which bills itself as the mother of all search engines, upon learning that the site was raising money in a private offering back in the summer of 2004. According to the civil action filed by the SEC, Cuban sold his entire 6% ownership stake in June of 2004 after learning that the company was raising money through a private investment of public entity, or PIPE. Several days later, the company announced the financing, and shares of the company dropped by more than 10%. By selling his stake, the SEC alleges, Mr. Cuban avoided more than $750,000 in losses. Mr. Cuban has not yet been reached for comment. It should be noted that these charges are civil, not criminal. So for now, Cuban is facing steep fines, not jail time. We don't yet know if the Justice Department will pursue criminal charges related to the case. In any event, it hasn't been a good few days for Mr. Cuban, who burst onto the scene in 1999 when he sold his company Broadcast.com to Yahoo for nearly $6 billion. Last week, word broke out of Chicago that Cuban's bid to buy the Chicago Cubs from Sam Zell's Tribune Company was unlikely to happen. Through his blog, Cuban said he declined to comment on, quote, anonymous comments from unsolicited sources. Again, with the Wall Street Journal, I'm Ashby Jones.